right, let's turn back to the markets as we head into the holidays. For that, we bring in Mona Mahajan. She is the U.S. investment strategist at Allianz. And Mona, we have seen the markets almost melt up in a slow pace over the last couple of months. Do you think that continues next year?
You know what? I think we're set up with a pretty benign backdrop right now. And just this morning, we got some great GDP numbers. We got jobless claims that look pretty good. And importantly, we got that business investment number picking up. When you think about it more broadly, this year we have a Fed that's somewhat working in our favor, as opposed to last December when we had a Fed that arguably maybe tightened one time too many. This year, we have these green shoots from the economic data, not only in the U.S., but globally. And then we have an inflation picture that's pretty benign. So with that backdrop, equity markets can do well. It's a somewhat of a Goldilocks scenario here.
What are you telling investors specifically? Because we had seen a bit of a rotation that has changed in recent days. What do you like?
Yeah, no, it's been interesting. Since August or September, when we had those recession sectors really carrying the market, think staples, utilities, REITs, we've had this rotation into the more cyclical sectors, think industrials, think not energy necessarily, but financials. Now we're seeing a little bit of a rotation back into the traditional technology and discretionary that's really carrying the market. What we're saying more broadly, a barbell approach makes sense. So on one hand of that barbell, technology, that long-term theme of disruptive technology continues to make sense for us, especially in a low-rate environment. But on the other hand, we do like this rotation out of defensives into cyclicals. I'll also make a quick point that to us, global equities can participate perhaps even more than U.S., given the cyclical nature of some of the European equities that we're seeing, even parts of Asia. So we do think, especially if the dollar kind of stabilizes or softens, the global equity market makes sense as well.
Barry is short on China right now. You said parts of Asia. Would that be one of them?
Yeah, no, so my view on this is the global manufacturing and global trade recessions are ending, and we are going to get an inflection higher. I would not buy the countries that are going through structural deglobalization trends. So Germany, China, for example. I do think Asia looks, non-China Asia looks attractive. Obviously, Japan's been acting great. So my barbell approach is I like U.S. cyclicals for sure, financials, industrials, enterprise tech. And then I like emerging markets, emerging Asia ex-China. As I said, Mexico is another one where if the dollar weakens because of easy Fed policy, that makes trade credit flow. We could sign USMCA. You could see a pretty significant rally in Mexico. It's been underloved in part because of AMLO concerns about political uncertainty
well,
type
not only
issues.
that, I mean, it's hard to imagine the dollar weakening. Even though the Fed's loose, it's not nearly as loose as other central banks.
We actually see the dollar weakening only in a scenario where actually global growth picks up and some of this political uncertainty comes off. So if U.S.-China trade emerges, if parts of Brexit emerge, I think the political uncertainty is actually supporting the dollar here. So if that comes off next year, as well as global growth stabilizing, that's where you get that dollar.
Yeah, that was sort of based on an interesting study that the BIS did, where they said that the effect of the dollar on the availability of trade credit was greater than the conventional currency competitiveness channel, right? So in the case of Mexico, it means you would think if the peso goes down, that makes Mexican products more attractive, but they can't get the credit to build the products to sell into the U.S. So actually they need, that dollar to actually weaken, peso to strengthen, so they get the credit and then they can sell the product.